Welcome back. Thanks a lot for staying with us here at CNN News 18, your one-stop destination for the Union Budget 2023. All eyes on the Finance Minister. She will be presenting the last full budget before the general elections of 2024. Will it be a populist one? Will it be pragmatic? Is there enough elbow room for the Finance Minister for those big bang reforms? We'll talk about all of that with our colleagues and our guests. But let's talk about what we were talking about before we took that very short commercial break, which is what are the expectations of the common man, the middle class, the Aam Aadmi? Can I get some relief from the Finance Minister? Can I get some sort of rationalization as far as the tax slabs are concerned? Now, why is it so important? Why is that tax relief really needed? Let's break down those details and some of the expectations that the middle class has this time around from the Finance Minister. Reason one is there really has been no change in the basic exemption limit in the last 7 years. So the middle class is saying, we waited for a long time, but this time around, we've had the pandemic. We're just coming out of the shadow of the COVID-19 pandemic and the kind of slowdown that we've seen. So we really need some relief. Reason two is pay cuts and layoffs have been triggered by the pandemic. In fact, we're also seeing mass layoffs still happen, and there are recessionary trends even now as we speak. So there is a lot of expectation of that common man to have more savings, more income in their hand, and some sort of rationalization. The other reason, this is a concern not just for the middle class but for experts as well, that rising inflation still continues to be a big worry. This, of course, is due to global parameters. Even though the government is optimistic that the inflation can still be managed and it is well within the target of the RBI, still considering the kind of numbers that we are seeing, does that still give some space for the Finance Minister to bring in relief for the middle class? We'll really have to see. The other reason also is this would lead to increase in purchasing power, something that the economy does need at this point of time. Remember, you also saw a new tax regime that was introduced by the government, but unfortunately, there haven't been many takers as far as this new tax regime is concerned. So possibly we'll see some sort of lucrative offers being made for more people to adopt to that tax regime as well. Our guests continue to be with us. Nalin Mehta continues to be with us. We also have Gaurav Chaudhary continues to be with us here in our Noida studios, and Gurcharan Das also continues to be with us. Gurcharan Das, I'd like to come to you as far as what can we expect for the middle class. Now, the Aam Aadmi, the common man, has been saying, we don't remember the last time we did see a rationalization of slabs. Yes, there has been an introduction as far as the new tax regime is concerned. But what about my pocket? How can I save more? Do you think this is that budget where the middle class can get some relief?
Well, the best thing to do really is the rationalization that one can do is really to have a tax where you remove all the exemptions and lower the tax rate. This is fair, and I'm so glad they've announced this committee of the BJP, this outreach program, because these things have to be explained to voters, to citizens, and so frankly, the best budget is the simplest budget. We don't need a CA. And so if you remove all the exemptions, similarly, if your tax rate on all asset classes, whether you have savings in equities, bonds, real estate, it should be the capital gains on it should be the same. That is ultimately the most transparent way. Why should you reward particular asset instrument and distort the economy in the process? So as the rational thing to do is the simplest, to go for the simplest route. And of course this requires explaining, just as you require explaining that its revenues are not as important as jobs. Yeah. Jobs is ultimately what the nation wants. So it's the same mindset which should explain that remove exemptions, make all taxes at the same rate on savings, on investments. These are the sort of things I feel. are the right thing to do.
Okay. Nalin, I want to bring you also back in the conversation as far as expectations of the middle class. One, of course, I agree with the point that Gurcharan Das is making, that possibly some sort of rationalization of slabs. Maybe you see, a few slabs but more exemptions. As far as that exemption limit is concerned of 2.5 lakhs, now the expectations are that can it really go up to 5 lakhs? But keeping the factors that we've already spoken about in the last 30 minutes, is there room for that exemption limit to go up till 5 lakhs?
Look, I think it can be done. Whether it be done or not, we'll have to wait and see. But fundamentally, I agree with the point that that Gurcharan Das made, that the simpler the budget, the better it is. Now we have multiple. You talked about the exemption possibility change from 2.5 to 5 lakh. Let's see what happens. There's also talk about changes in section 80C and the deduction limit there. Let's see, but I think the more simplified, the better. The other thing which I think Gaurav also raised earlier was this conversation around the possibilities of changes around the capital gains tax, to rationalize that and to have perhaps one rate across different classes, because right now there are different rates for different things, whether it's for debt mutual funds, it's different, for real estate it's different, and so on. So that's another conversation. I think there is also a conversation around indirect taxes and corporate taxes as well. So see, these are the kinds of, these things are important because they will not have a significant impact on the overall budget, but they will be important signaling for sentiment and for the middle classes. And like Gurcharan Das pointed out earlier, say 75-80% of the budget is already preset, because that's the nature of the financial situation. So what you choose to emphasize and what you choose to signal is really important. And therefore, I think this is the kind of thing that one would be looking at. The last changes that were made in the personal, for individuals from middle classes, for example, was 2017-2018. So a year before the election. It will be interesting to see what the government does with that.
Right. Gaurav, taking on from the point that Nalin and Gurcharan Das are, saying, well, an ideal budget will be where you can please everyone. Yeah. But as far as the tax regimes are concerned, we did touch upon this a short while ago. There haven't been many takers as far as the new tax regime is concerned, about 5 lakh people. Why has that happened? Now, of course, the basic understanding and a very simplified understanding is that mere liye kya hai? If the exemptions aren't many, why would I want to adopt and change my entire documentation to that new tax regime? But what do you think has lagged people from finding that new tax regime lucrative?
Yeah, there's one simple reason for that, in my view. One is that it's just to draw an analogy from the infrastructure sector. You cannot have a tolled highway alongside a free highway. People obviously take the free highway. So in this case, the tolled highway is the one which is without exemption, which is ostensibly a simplified tax structure. But what has happened is that there is also a bit of a problem that the government probably did not foresee, is that a large part of the savings that people make in, say, through instruments that are qualified under Section 80C exemptions, such as the PPF, for instance, the government, a large part of the government's fiscal deficit also comes in by when it dips into that kind of that pool of surplus, that pool of savings that people park in this kind of instrument, these tax savings instruments. Now, suddenly, if you take away the exemptions, the attractiveness of these instruments, so far as people, salaried class is concerned or the middle class is concerned, goes away. So there might be there may not be any incentives for people to actually park their savings in this kind of instruments. While it's okay, it will be neutral for the individuals or the households to move them money from a Section 80C instruments to other instruments like equities and bonds in the markets. But for the government, it creates a public finance challenge, because how does then the government go and borrow the extra money? Until this point in time, it was actually dipping into this at a far lower rate than the market rates. If suddenly this savings, this pool of domestic savings is not available with them because people have moved their entire money out of this because there is no tax exemptions available, then it creates a public finance and a public borrowing problem, which could lead to actually complications in the fiscal deficit management glide path. The other problem is also of the long-term capital gains tax. Now, if you look at the capital gains tax rates actually differ within asset classes. I'll just give you a few examples. For example, the short-term capital gains tax, which is also called the STCG, tax on stocks and equity mutual funds is 50%. For bond funds and bonds, which are both listed and unlisted, investors pay currently taxes as per their income tax slab rates, which could go up to 30% for many taxpayers. Again, if you look at long-term equity for equity-linked mutual funds, held for over a year, they attract a 10% long-term capital gains tax if that exceed rupees 1 lakh. Debt-oriented investments and immovable property held for a minimum of 3 year and a 2 year period respectively are considered as long term, and they attract a 20% tax. So these are extremely complicated, because one of the reasons that India needs to actually simplify this is because we also need to develop India as a hub of global capital, particularly in the Asian region. Right now, most of the Asian capital is housed in Singapore. It makes eminent sense to simplify this and also attract global capital, which is going to fund our startups and also take care of a large part of the investment requirements.
Right. How much of this is actually possible? We really have to see, because it's only a couple of hours to now go before we see that photo opportunity of the Baikata with the finance minister and then the presentation of the union budget. I'll just request our colleagues and guests to stay on with us. We're slipping into a very short break. When we come back, we talk about the big expectations that India Inc. has from the finance minister.